Hello, everyone. Thank you for joining me today. I am Andrea Wilson. I'm the broker and owner at Brickhouse Realty, and we are located here in Northeast Ohio. And so today, like every other Monday, I like to come on here and give you some information as it relates to real estate. Traditional buyers, traditional sellers, and of course, my real estate investors. So, there's a lot going on in the marketplace when we see or we just hear all of this information. Sometimes we are on information overload on you should be investing in real estate, you should be invested in stocks, and you should be doing all of these things. And it's like, well, what do I do? My money can only go so far. So what should I do with my money? We're all looking for that way to just live a better life. So, trying to maneuver and decide what is the best thing for you and your family is always hard to decide because our money is limited and you want to make the right move. So, it was interesting enough. I actually had read a recent article that talked about stocks versus real estate. And so I was like, oh, well, I want to talk to you guys about some of the experiences that I have and just kind of give you some feedback on the article that I actually read. So, a couple things. Obviously, I'm a real estate girl, but I do like stocks a lot. And I will say, before even going into all of this or any of this, you want to diversify. You want to diversify your portfolio and invest in stocks and real estate, period. Without a doubt, depending on where we're at in the economy, sometimes one can be more favorable than the other one. So that's going to play an important part of it. But if you are someone and you have limited funds, I'm going to answer or share some information with you guys to make maybe that will help you along the process or try to make a decision for you and your family. And so, what did this article that I read talked about? They went back and looked at stocks and real estate over a 145-year period, which is a really, really long time. But they had to stretch out and look at that time frame to get a clear understanding of and removing some things from the real estate side of it to kind of make it fair and balanced. So it's important for you to understand that. Right. So the article actually kind of started out and it was more favorable for on the real estate side. However, it all depends on where you're located. So I talk to a lot of people that are in the United States and outside of the country. And so you're investing your money into several different markets. And so the margins were actually very, very close. For housing, it was at 7.05%, in terms of return on investment, and equities was 6.89%. So, what does that to say? In a moment's notice, one could shift, and be over the other one at any point in time. So I think there's a couple things of how you really break down to decide what's the best route for you. Number one, how much money do you have? How much money are you willing to invest? Because if you're talking about investing in real estate, the barrier to entry is much larger than it would be to open up Robinhood on here and buy some stock into a company. So that's going to be the number one thing. To buy stocks, you don't have to have good credit. You just need to have some cash, maybe a cell phone, and you're able to then purchase those investments, move and shift as you will. But if we're talking about real estate, you might need good credit, you might need some cash, and you may need a little bit of experience if that property needs construction work. So this is going to be something that you have to consider. I believe that understanding the real estate side of the business is much easier to understand overall than all of the moving parts when we're talking about the stocks world. The other thing that you have to consider is if you have a chunk or a lump sum of money, how long can you put that money elsewhere where you won't necessarily need that money? Because even in stocks and even in investing in real estate, the longer you're able to hold on to that house or those stocks, the more profitable it becomes. So when I'm looking at this report and looking at that overall annual return on these looked over 145 years. It's looking over that long period of time. To give the further example of that, if you're buying real estate, then the longer you can hold on to that property, say when you bought that property, you had a mortgage on there. Eventually, when you make those monthly payments, the principal balance on that is going to get lower and you'll own it 100%. And then after you own that property, your profits will explode at that point because 100%, you're no longer paying a mortgage. That then becomes money inside of your pocket. So that's kind of how you understand like that long-term growth on there. So overall, you just really have to understand where you're at, where your interests are. Start getting more educated and gathering more information on both sides. And for some people, they just like being in the stocks world a little bit more. It's faster. You can move in and out of it. And so that might interest you a little bit more. So it's definitely something that you want to make sure that you're interested in. If you're more interested on the real estate side, then you might gravitate towards that side as well. But at any rate, you want to make sure that you have people in your circle that's going to help you navigate through all of this. You want to diversify your portfolio. And even within that stock market, you want to make sure that you have a diverse portfolio over there because you shouldn't just be investing in one area. And same thing in real estate. You might want to have a mix in your portfolio of single family homes, multifamily homes, and maybe even some commercial properties. So I don't necessarily know, just even reading through this article, that it really 100% saw the answer of saying one is better than the other because everything it's so close. 6.89% versus 7.05% is so close that if you go with either way, you will be just fine. But I will say this, if there ever is a time that you needed to access your money, if you're in the stock market, then it's just a quick hit of a button to sell off those stocks and you could potentially have that money in hand the next day. If you're investing in real estate, you can get your money back once you sell that property, but that can take a longer process for you to actually get cash in hand. So understanding where you're at, how much money you have, what your goal and focus is, what the purpose is, why are you saving? Are you saving for retirement? And then what do you like to do? The more you like to do it, the more you'll want to learn about it, the better you become at it, and then you'll start to see additional growth there. So real estate or stocks, I say both. You want to build both of those portfolios, pretty much at the same time. You start small and then you start building your way up on there. So I'm not sure if they answered many of your questions, but that's just wanted to kind of break that down, looking at the numbers on there at the percentage of it, and just saying that it's actually both. You can't go wrong either way, but you do have to have patience in both of those. So thank you guys for joining me today. Just a quick little pop on here today. My name is Andrea Wilson. I'm the broker over at Brickhouse Realty. I like to jump on here on Monday, giving you tips, advice, and information on real estate. Feel free to send me a DM or a private message, and I will answer all those questions that you have. And you guys have a wonderful day.